You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion. Delivered by conflicting media reports, we connect the dots so you know the actions you can take of your family, your business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We're a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And then remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
Well, I do have a great team when it comes to developing a financing plan or plan to save you money. I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. What do we got to celebrate today? Get to know your customers day. Isn't that every day? I guess if you're in a service-based business, I had a friend of mine one time said, if you want to serve your customers for life, you better speak to them during their life. Just throw that out there. Get to know your customers day. Brandied fruit day. Isn't that like a fruit cake? Isn't that what they use to make fruit cakes later in the year? Or do they make them early in the year and they seem like they just last forever? Maybe it's because of the brandy. Brandied fruit day. Okay, that looks good. National Chicken and Waffles Day. Where do you go for chicken? Everywhere it seems to have chicken and waffles now. Where's your favorite? Now put that into the comments. We'd like to see that one. National Chicken and Waffles Day. I like that one. And how about this one? Get Smart About Credit Day. Now, that should be almost every day, but as you know, we have launched an affiliation or a relationship, creditsanitizer.com, creditsanitizer.com. I'm highly recommending that if you're thinking about buying, selling a car, a house, anything of value where you need credit, you may want to connect with our folks over at creditsanitizer.com and at least get the free credit audit. Yes, you do have to supply a specific credit report. It costs $1, but you do have to supply that. But I'm just sharing with you that a credit audit, 79% of the people have errors on their credit reports. So I'm assuming you're part of this world. Now, if you look right, look left, look forward, look backward, and you can count 10 people, well, there's only 2 of them that they claim have accurate credit reports. I've been looking at credit reports. I helped the first family get a loan, not the first family of the United States, but the first family that I helped get a loan was in 1983. So I've been looking at credit reports for a very, very long time. Now, they didn't even have FICO scores back then, but I've been looking at credit reports for a very long time. And I'm going to share with you, I've never, ever seen a credit report that's completely accurate. Let's move right along. Let's see. The Dow Jones Industrial Average now up 114 points. The S&P 500 is flat, basically. It's up 2 points. NASDAQ up 53.80. Oil is up 67 cents a barrel. You got to love our state of California, state of confusion. So I looked at this morning. This one just fascinated me because, I just look and like to know what's going on in the world. And yes, we have an excessive amount of cost built in. There's 8 refineries in the state of California now, only 8 gasoline refineries. Phillips 66 is going offline with theirs next year. They talk about how difficult it is for this state to work with. But think about this. I've shared with you that there's over $1 in taxes and fees built into the gasoline prices here in the formerly Golden State, where we are paying today, on average, $5.88 a gallon, $2.05 more than the national average, $2.05 more than the national average. Josh, you're at $5.14. Jody's at $4.42. And Lori's at $3.38. Unbelievable. But take a look at this, because I just got these numbers this morning. For the state of California, for those of us here in the state of California, taxes and fees, 54 cents state excise tax, 18 cents federal excise tax, 14 cents low carbon fuel standard, 23 cents cap and trade, 14 cents state and local sales tax, 2 cents state underground storage tax. Now, why do we have to have a tax on storing gasoline underground? Comes out to $1.25 a gallon right now. $1.25 a gallon just in taxes and fees right here in California. And the governor says that it's all because the oil companies are gouging us. Well, maybe, Mr. Governor, if it wasn't for such a difficult place to do business, maybe they wouldn't be gouging. Maybe they wouldn't have the extra costs that they have to do to stay compliant with the state of California. I'm just throwing that out there because elections have consequences. The more we continue to tax the oil and gas companies, do you think they can go do business anywhere in the world? Why would they want to be doing business in California? So maybe what they'll start doing is they'll start building the refineries. They can't build them here. And actually, we're getting less and less refineries here. So maybe what they're going to start doing is they'll go to Mexico and build refineries. Is that what they want? Maybe that's what the governor wants. Send the jobs out to Mexico and see how that works out for us. I'm just throwing that out there because anytime it comes, they're going to have a special session of the state legislature to try and put a tax on these companies. Now, whether you like it or not, businesses do not pay taxes. I don't care what you have to say. Businesses do not pay taxes. Think about that. They collect them. So no matter what tax you want to add to a business, they have to collect it and forward it. Right? A business, they collect sales tax in many instances. They add it to the cost of whatever you're buying and they send it to the state or the regulator. Does that make sense? Unbelievable that they're doing these things and they don't understand. And the average person says, oh, yeah, let's tax big business. Well, I just showed you where $1.25 comes right into the cost of fuel. Now, if we got rid of all of those things, our prices could come down quite a bit because the businesses don't have to collect it and forward it. If there's a new tax, the businesses are going to add that on and forward it. Who gets to pay it? You and me. Just amazing. I can't believe how folks don't see this and continue voting for this moron in Sacramento because it sounds good. Now, I've got a big dilemma, and I want maybe someone that's listening this morning can help me with this. Or if you're listening to the radio this afternoon on AM 1490, you can help with this. I never, ever seem to agree politically with Governor Newsom. And I'm inclined to vote no on Proposition 30, but then I see an ad that says he's pushing the no vote on 30. So I have to relook and see, what is it that I'm doing wrong? Unbelievable, because I know I've got to be the one that's wrong. Just throw that out there. Hey, again, as I've shared with you yesterday, we are going to give away seven locations. I've got 5 trips to each of 7 locations. You're going to have to go and register. You're going to have to go. Josh, we have rsrraffle.com set up, rsrraffle.com. I think that we've got that. Or you can just put a comment in that you want in on the raffle. You don't have to buy anything. You don't have to do anything. You just have to, give us your name and contact information. Otherwise, we can't get it to you. And then once we mention your name, either on the socials or on air, you're going to have 48 hours to respond, and we'll send you the trip. Now, we don't pay taxes. We don't pay fees. We don't pay gambling debts, but we do have the hotel stays Las Vegas, Hawaii, Nashville, Palm Springs, San Diego, Cabo San Lucas, and Cancun. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, what's ahead for home prices? We'll talk about it. Top 5 reasons why you should buy today. How does a home equity loan affect your credit? All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
79% of all credit reports have errors that should be corrected through factual disputing. You could be saving thousands every year if your report was accurate. CreditSanitizer.com provides a free credit report audit when you furnish a specific $1 credit report. You can use this information to request corrections to your report and potentially save thousands of dollars. Get your free credit audit at CreditSanitizer.com. That's CreditSanitizer.com for a free credit report audit. CreditSanitizer.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. S&P 500 now up 5.41. The 10-year Treasury is up 4 basis points, 4.172. That's good for the seniors. Not so good for mortgage rates. The mortgage-backed securities are down 20 basis points, which means interest rates are up again. And speaking of home loan rates, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. 30-year conforming rates locked yesterday at 7.026, 30-year jumbo rate 6.746, FHA 6.788, USDA loans, the 30-year for those rural areas, in most cases, no down payment, 6.849. And the best loan on the market for those that earned it, the 30-year VA loan, 6.733. But why is that happening? What's driving the market right now? Well, a lot of it has to do with inventory. Mortgage bonds, they were lower in the early going, but have clawed back a little. Now they're down again. It all has to do with that 10-year. New recent high of 4.176. Housing News, existing home sales, which measures closings on existing homes, showed that sales were down 1.5% in September at a 4.71 million annualized pace, which was slightly stronger than expectations, but still a decline. On a year-over-year basis, sales are down 23.8%. Inventory has crested, as it does every time this year after the normal seasonal build, and declined for the second straight month to 1.25 million. There's now 3.2 months supply of homes, which is tight because 6 months is considered balanced. But if you look at active listings, there are only 732,000, which means that 41% of the inventory in the existing home sales report is under contract and not truly available. This speaks to demand, as a normal market has 25% of inventory under contract. When looking at the month supply of available homes for sale, it's really 1.9 months. The NAR, National Association of Realtors, Chief Economist Lawrence Yoon underscored our beliefs on the housing market and how dynamics are so different than during the housing bubble. Quote, despite weaker sales, multiple offers are still occurring with more than a quarter of homes selling above list price due to limited inventory, unquote. Yoon added, quote, the current lack of supply underscores the vast contrast with the various major market downturn from 2008 to 2010, when inventory levels were 4 times higher than they are today, unquote. And while there are reports that homes are sitting longer on the market, if they are priced correctly, they are still moving fast. Average days on market increased slightly, 16 days to 19 days. And 70% of the homes were on the market for less than 30 days. First-time home buyers have accounted for 29% of sales, which was unchanged from the previous report, but amazingly still higher than 28% last year. Cash buyers accounted for 22% of sales, which declined from 24% in the previous report, while investors purchased 15% of homes, which is down from 16%. Make sure that you're using the different tools that we have available to help you demonstrate this to buyers and sellers. Foreclosures and short sales accounted for roughly 2% of all transactions, which is up slightly from 1%. Redfin yesterday said in September, new listings fell 22%, the largest decline since May of 2020 and April of 2020, respectively. They went on to say that demand is slumping due to surging mortgage rates, but prices are being propped up by inflation and a drop in the number of people putting their homes up for sale. Initial jobless claims, which measures individuals filing for unemployment benefits for the first time, decreased 12,000 to 224,000 after 2 weeks of increases. The volatility of up and down within this report continues, and we're not getting a clear signal. Continuing claims on those that continue to receive benefits after their initial claim rose 21,000 to 1.385 million. The Philly Manufacturing Index, measuring manufacturing activity in the Philadelphia region, was down almost 9 points after a 9-point decrease was reported in the New York Manufacturing Index. Manufacturing is clearly in a recession and is another sign of the economy slowing and in a broader economic recession. Yesterday, the Fed's beige book had recession written all over it. Citations of the word recession have gone from 10 last month to a record high of 13 in October. Additionally, businesses reported that the pass-through of higher costs was becoming more difficult and they were receiving pushback from consumers. This means that companies have reached their max in pricing power and should contribute to lower inflation. So that's the Mortgage Minute today, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. So today, what I want to chat with you about, I shared a little earlier, the top 5 reasons why you should purchase a home today. Don't wait. We're going to go through those. I've got a chart or a PowerPoint that Josh is driving. I'm going to talk you through my thoughts on this, and let's get started. If you're a buyer in today's market and you're thinking, I want to get into the market, but I'm going to sit on the sidelines or not enter the market for the first time because I think rates and prices are going to drop. I'm going to wait until maybe the first or second quarter of next year. In my opinion, you're making a huge mistake. I could give you a dozen reasons why, but let's just focus on the top 5 in this discussion. My top 5 reasons why you should buy a home today versus wait for those rates and prices to drop. As you know, my name is Ron Siegel, host of Ron Siegel Radio and branch manager at Geneva Financial. Here are the top 5 reasons why you should buy in today's market. Number 5 is higher rates or fewer buyers. So the big move up in interest rates, that it decreases the affordability, which is bad. People are now struggling with affordability. I'm going to show you a chart I'm using going all the way back to 2006 when we had our last issue with affordability. So you can see clearly we have fewer buyers in a higher rate environment, which is good for today's active buyers. Take a look at number 4. You can look all the way back there at July and see where the affordability was. Take a look today. And yes, we are lower in affordability. So if you're out there buying and you can afford, or we can help you get to a point of affording, you're going to be much better off. Number 4, the last 2.5 years, in order to buy, you had to overbid for the property. Sellers prioritized offers where buyers were releasing protective contingencies for your loan, your inspection, your appraisal, all of your contingencies. That's like buying a property with no safety net. So let's just say in a normalized market like today, if one of those things go awry, either the value, a home inspection, or even your loan, for an example, you have the ability to exit the transaction without losing deposits. Again, the last 2.5 years, the sellers did not need to accept offers with contingencies because it was such a heavy seller's market. Number 3, we have a better selection of homes. So the last 2.5 years, homes have come to market, and then at times, within the hour, multiple bids are on the property, and the house immediately came off the market. You may have never known it was available, and a lot of times through the pandemic, those houses were coming soon or not quite to the MLS. Those are called pocket listings, and that transaction was done outside of your view, so we had no idea. The only thing you saw was that house just sold, and again, had no idea it was ever on the market. So now you're going to have a better selection as we start to pivot into buyer's market. Today is the stronger market for you, the buyer. Number 2. This was kind of the main gist of this whole discussion. You're a buyer that's left the market and sitting on the sidelines, stalling to enter the market because your belief is, I'm going to enter when rates and or prices drop. That's a big mistake. And think about what the last few points, numbers 5, 4, and 3 have said. Those bullet points of the top 5, those are now gone because those issues were a hot seller's market. As a buyer in that phase, in those first 3, it's because it was a heavy seller's market. If prices and rates drop, we're going to move right back into that seller's market again. Do you want to go through that again, trying to find a new house? Now, you as a buyer, if you're waiting, you're going to put yourself right back there in that position of overbidding, releasing your contingencies, which is no safety net for you to protect the deposit, and then a limited selection again. So that's a buyer's problem. If you wait because of those issues, you're going to wait for more buyers to come back into the market, prices to go up, and interest rates will be down, but again, it's going to still cost you more. And the number one reason for waiting, or for that I say for buying right now, this is the biggest issue. Because we're in a buyer's market, we're allowed to negotiate concessions and terms with the seller. So we did this with a lot of families in 2007, 8, 9, 2018, 2019, and the past 6 months, because we can negotiate concessions. There's a multitude of ways we can do this. And I'm going to be putting out, and you can get a copy of it here, RSR Top 5, rsrtop5.com. You're going to be able to get a copy of it. But I'm going to be putting out some different methods of affordability for you, ways that you can get back into the market. That's the whole idea. That's what we started talking about. So we're going to break down temporary buy downs, a 3-2-1 buy down, a 2-1 buy down. Those are temporary. We're going to look at permanent rate buy downs. When we take a seller concession, we can reduce the interest rate. We've done lots of these, and I know how to get them done on the purchase contract correctly and internally at the bank, so we can avoid predatory and high-cost lending laws and the byproduct where we work with concessions. And remember, that's only because we're in a buyer's market. We dramatically reduce the rate. We reduce the payment. We can reduce the income needed to qualify, and it's for the life of the loan. It's not temporary. Now, we do have those temporary ones available that people are talking about, but I like the permanent ones better. I think education is good, and you're going to quickly realize now's the time because you're the buyer and you control the market. And again, we're going to have what we call a TCA, total cost analysis, available. Those are below if you're looking at our page already, but they're below. You'll see the financing, what you're looking for. Again, how to get back into the market, the temporary 3-2-1 buy down, the temporary 2-1 buy down, the permanent buy down, all done within the guidelines of lending. And we're going to show that to you. Again, you have questions, give me a call, and we'll we're more than happy to work through those numbers with you in a customized manner. We just used examples here, and those are the top 5 reasons to buy real estate today. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, what's ahead for home prices? How does a home equity loan affect your credit? And yes, we do have some trips that we're going to tell you how to get involved with on that giveaway. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily Home and Finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule an appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Great tool. I love the Home Scout tool. First tab, you can start shopping for properties anywhere in the sound of my voice. And since we are on the, well, I guess not. We're on the World Wide Web as well as our socials and ABC News and Talk AM 1490. So continental United States, about 97% of all properties we've got are available to you to shop for right there on rsrhomescout.com. Fourth tab over, put your address in there. No, we don't save it unless you want it to get a message every month. But you can put the fourth tab over. You're able to get the pricing of your property. So you put in your address. It tells you 4 different valuation models of what your property is worth. This is looking backwards. So you need to talk to a professional realtor in the area if you find a property for your property, if you want to know what you can sell it for, because they're looking forward in that situation. And you know, if there's something on there, it's telling you what things have sold for 2, 3, 4, 5 months ago. And today's not the same as them. The market has changed. So you're going to want to chat with those agents and get that information. What's ahead for home prices? As the house hunting market cools in response to the dramatic rise in mortgage rates, home price appreciation is cooling as well. And if you're following along with headlines in the media, you're probably seeing a wide range of opinions calling for everything from falling home prices to ongoing appreciation. But what's true, what's most likely to happen moving forward, opinions differ. The most likely outcome is we'll fall somewhere in the middle of slight appreciation and slight depreciation. Let's take a look at the latest expert projections so you have the best information possible today. What the experts are saying about home prices next year. We've got a graph that shows the most up-to-date forecast from 5 experts in the housing industry. These are the experts that have most recently updated their projections based on current market trends. The average of all of them, prices will go up 0.2%. The Mortgage Bankers Association says 2.8%. The best of all of them, in my opinion, and I'm right. Home price expectation survey, 2.6%. The National Association of Realtors, 1.2% up. Fannie Mae says down 1.5. Zelman says down 4.0. Why do I say the home price expectation survey is the best? Because it accounts for all those that I mentioned, plus over 100 economists from business, from academia, from banking, from real estate, all industry. So you can tell by looking at the chart, if you're looking at it, or what I just shared with you, home price appreciation, just a more moderate rate than recent years. There's some green bars. There's a couple of experts. There's not a lot of them that are calling for depreciation. While there is not a clear consensus, if you take the average shown there that I told you was 0.2% of all 5 of these forecasts, the most likely outcome is nationally, home price appreciation will be fairly flat next year. Now, we get this from a service, and I'm not a big fan of when you take a weighting, when you do an average of 5 different entities, and one of them already has an average of over 100, maybe the other 4 entities are getting weighed just a little bit too heavy. What's it mean? Basically, experts are divided on what's ahead for 2023. Home prices will likely depreciate slightly in some markets and will continue to gain ground in others. It all depends on the conditions in your local market, like how overheated the market was in recent years, current inventory levels, buyer demand, and more. The good news is home prices are expected to return to more normal levels of appreciation rather quickly. The latest forecast from Wells Fargo shows that while they feel prices will fall in 2023, they think prices will recover and a net positive in 2024. That forecast calls for 3.1% appreciation in 2024, which is a number much more in line with the long-term average of 4% annual appreciation. Home price expectation survey from Pulseonomics, a poll of over 100 industry experts, I told you that, also calls for ongoing appreciation of roughly 2.6 to 4% from 2024 to 2026. This goes to show even prices decline slightly next year, it's not expected to be a lasting trend. As Jason Luris, co-founder and chief data officer of Parcel says, quote, in the absence of trustworthy, up-to-date information, real estate decisions are increasingly being driven by fear, uncertainty, and doubt, unquote. Don't let fear or uncertainty change your plans. If you're unsure about where prices are headed or how to make sense of what's going on in today's housing market, reach out to the local real estate professional. That's one of the area trusted real estate professionals of Ron Siegel Radio for the guidance you need each step of the way. The bottom line, the housing market is shifting and it's a confusing place right now. Let's chat about it. And if you missed it, you should go back to the last segment or go visit us on ronsiegelradio.tv or go to ronsiegelradio.com in the archives. You can see our last shows right there. And it tells you my top 5 reasons for buying a home today. My top 5 for buying a home today. As always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. And can I count on you to introduce us if you have any friends, family, or coworkers looking to buy, sell, or refi? Just throw that out there. We're always here to help and to guide and to educate. That's the Real-Time Real Estate segment. Again, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. So as I've mentioned to you before, we are giving away 5 trips to each of these destinations. If you respond, Las Vegas, Hawaii, Nashville, Palm Springs, San Diego, Cabo San Lucas, and Cancun. If you get registered, no cost to register. You don't need to buy anything to register. We're going to do our wheel of names. We'll put that up on the screen each day. We're going to do it during the breaks. That way it's easier because you can't see it when it's on radio, but we'll do it on the breaks. We will mention who the winners are. The winner will then have 48 hours to reach out to us and can claim a trip. So it's going to be real simple. Again, you don't have to buy anything at all to do it. It's the holiday time. We're thankful that you listen to Ron Siegel Radio. So let's chat a little bit. Just you and me. I know that we've got 7 listeners. We'll have a little chat here. I talk about this on a regular basis, and we like to give away lots of stuff on Ron Siegel Radio. And one of the things that we've talked about giving away is a method for you to pay your credit cards off quickly. And by doing that, you're also going to, if you do things properly, we're showing you also how you can pay your credit cards properly in order to maximize your FICO score. So paying off your credit cards quickly, real simple, rsrnodebt.com, rsrnodebt.com. Or you go to rsrbsa.com. Either one works, rsrbsa.com. Whichever way you want to go, they both work. You're going to put in there all of your debts. What we want to find out there is what is your blended household income. Now, I get a lot of people say, Ron, there's no way in the world I'm going to get out of my 3 or 3.5 or 4% loan in this market when I just shared with you, according to our friends at OBMOINA, or gave you their disclaimers earlier, that conforming loans locked at 7.026% yesterday. Why give up that low interest rate loan when you don't have to? Well, the answer is pretty simple. If you're paying 16% on credit cards or more, I know there's a lot of people that are paying 29% on credit cards, but say you're paying 16%. Say you're already paying 7% or 8% on student loans. What's your car payment interest rate? Blend all of those numbers together with your mortgage and see what that blended household interest rate is. Now, you may come up with 7%, 8%. I've seen as high as 12%. Now, right now, we're in a tough environment. Inflation is growing dramatically. We know that. Gas prices are up. How do we help you? How can I help you with these things? There's a couple ways. Number one, we might look and say, well, if we retire all that other debt and get to use up some of your equity from your home, that might benefit you. Because not only are you going to be putting that, you're amortizing it over a longer period of time, you're reducing the interest rate. So your debt service, the total of all the payments drops, and you have a much better situation because you have to make the minimum payment. You don't have to make the maximum payment. Now, what would be the maximum payment? Well, the maximum payment would be taking your savings, because you're already making all those payments, and applying that extra money to your principal. And we demonstrate that in rsrpaymentassist.com, rsrpaymentassist.com. You can go there. You can go to rsrrapidpayoff.com. These are all free tools that we give away. rsrrapidpayoff.com. Again, free. You have to give us some information. We do a little work on the back end and get back to you. Again, what's the cost of getting educated? We're going to ask you for some statements. You can black out account numbers. I don't care about them. To be honest with you, whether you do this or not, it's not going to change my world. It changes yours. So that's the whole idea there. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. More when we come back on how to improve your life, smart life. We're going to also have a Your Credit Matters segment. How does a home equity loan affect your credit? We were just talking about home equity loans. We're going to talk about that in just a minute, how it affects your credit. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
79% of all credit reports have errors that should be corrected through factual disputing. You could be saving thousands every year if your report was accurate. CreditSanitizer.com provides a free credit report audit when you furnish a specific $1 credit report. You can use this information to request corrections to your report and potentially save thousands of dollars. Get your free credit audit at CreditSanitizer.com. That's CreditSanitizer.com for a free credit report audit. CreditSanitizer.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Your Credit Matters segment today being brought to you by CreditSanitizer.com. You have a credit report, it's wrong. What are you doing about it? Let's see here. How does a home equity loan affect your credit? If you own your home and have significant equity in it, you may be able to tap into some of that equity through a home equity loan or home equity line of credit, a HELOC. Before you do, however, it's important to consider how taking on an additional loan or line of credit may affect your FICO score. Here's what you need to know about how home equity loans and HELOCs work and how they may impact your credit. So, how do the home equity loans and HELOCs work? It's a type of second mortgage. Home equity loans and HELOCs are similar in that they both allow homeowners to access some of the equity they have in their home, either in the form of an installment loan or revolving line of credit. With a home equity loan, you'll receive the full loan amount up front and then pay it back over a fixed period of time, which can be between 5 to 30 years with a fixed interest payment. In contrast, a HELOC is a revolving line of credit similar to a credit card. Upon approval, you can take draws from your line of credit, typically via a debit card, bank transfer, or even paper checks. Does anybody use paper checks anymore? During the draw period, which can last up to 10 years, borrowers are only required to pay interest on the amount they've borrowed. However, if they max out their credit limit, they'll need to pay down the balance if they want to continue making draws. Once the draw period ends, they'll enter into a repayment period, which can last up to 20 years, during which they'll pay down the remaining balance. Unlike home equity loans, HELOCs typically have a variable interest rates, which can fluctuate over time. In some cases, though, the lender may allow you to convert some or all of your balance to a fixed rate payment loan. With both types of credit, you may be able to deduct the interest you pay if you use the loan funds to buy, build, or substantially improve the home used as collateral for the debt. If you use the proceeds for other purposes, though, the interest is not tax deductible. Again, not giving you tax advice. Talk to a CPA, enrolled agent, or other licensed professional. How do home equity loans and HELOCs affect your FICO scores? There are several different ways that these second mortgages may impact your credit for better or for worse. Here's a breakdown of what to expect. Payment history. If you can manage to make your payments on time, home equity loans and HELOCs can help you increase your FICO scores over time. However, if you miss a payment by 30 days or more, it could have a significant negative impact on your credit. Additionally, because you're using your home as collateral for the loan or line of credit, defaulting on your payments could result in the lender foreclosing on the home, damaging your FICO scores even more, and leaving you without a primary residence. As a result, it's crucial that you make sure you can afford the additional monthly payments before you commit. Amounts owed. How much you owe is another important factor in your FICO scores. With a home equity loan and a HELOC, how much you owe is another important factor in your FICO scores. The debt carried via a home equity loan or a HELOC can impact your FICO scores via the amounts owed category of your credit score. Under the amount owed on all accounts, subcategory. How much of the installment loan amount is still owed compared with the original loan amount may also be a factor. Length of credit history. Adding a new trade line to your credit reports will result in the average age of your accounts going down, which could have a negative impact on your FICO scores. However, because home equity loans and HELOCs often have long terms, they can have a positive impact on your credit over time, particularly if you manage them responsibly. New credit. Each time you apply for new credit, the lender will typically run a hard inquiry on your credit reports to evaluate your credit worthiness. A new inquiry may knock fewer than 5 points off your FICO score, but if you apply for multiple credit accounts, it could have a compounding effect. Keep in mind, though, that inquiries and other changes to your credit report impact everyone's scores differently, depending upon their credit history. Some people might see bigger changes than others. The good news is that if you want to shop around and compare interest rates and terms before deciding on a lender, you can usually do so without worrying about damaging your credit score too much. With newer FICO score models, mortgage, auto, and student loan hard inquiries made within a 45-day rate shopping period are combined into one for scoring purposes. The credit mix. Having different types of credit can help boost your FICO scores because it shows that you can manage a range of credit options. So adding a second mortgage could potentially improve the credit mix component of your credit scores. Make sure your credit is ready for a home equity loan or a HELOC. If you're thinking about applying for a home equity loan or HELOC, it is important to understand the requirements and to prepare your credit for the application. Like conventional mortgage loans, second mortgage loans typically require FICO scores of 620 or above, though some lenders may provide some flexibility. Regardless, the higher your FICO score, the better your chances of securing a lower interest rate. Additionally, many lenders only allow you to borrow up to a combined loan-to-value of 80%. We do have some hard money lenders or private money lenders, which may alter those numbers, but you got to pay for it. That means that the balances on both your primary and second mortgages cannot exceed 80% of the value of your home. But again, some lenders may be more flexible than others, and you may be able to borrow up to a combined loan-to-value of 100%. In addition to your credit history and home value, lenders will also consider your debt-to-income ratio, DTI for those of you in the industry, which is the percentage of gross monthly income that goes toward debt payments. DTI requirements can vary by lender, but you can generally expect a limit of 43%. Before you apply for a home equity loan or HELOC, check your FICO scores, cleanall3.com, cleanall3.com. Cost you $1. You get all 3 FICO scores in your full report. You can then use that same report for a free credit audit at creditsanitizer.com, a free credit audit for creditsanitizer.com. Told you a lot about all these different issues. It's a great way for you to help your FICO score. And then when interest rates come down, generally they do during a recession, we'll be in the position to help you out and get all of that cleaned up completely. So you can go and I'm going to share with you, again, rsrccpayment.com, rsrccpayment.com. It's a short 8-minute video or 7-minute video, something like that, telling you how to pay your credit cards the right way. So if you get that HELOC, you might want to get the credit report done the right way or get your payments made the right way. Clean up all your credit. Now clean up all your debts. Here's the issue that I cannot help you with. Sorry, I've done this for a lot of years. We've shown people how to get out of debt, pay off all their debt using some of their home equity. It's up to you once you pay it off not to run the debt back up again. Get a lot of people that just run that debt right back up, and it defeats the whole purpose of what we're trying to share with you. So you can go and do this, rsrrapidpayoff.com, rsrrapidpayoff.com. And then once you've figured that out, we've gone over that whole thing with you, then you go to rsrccpayment.com, rsrccpayment.com. And you're able to then it's a pretty simple process that we really want to show you how to live your life making 2 payments every single month. 2 payments a month. I hear people say, well, 2 payments a month doesn't matter, Ron. Well, that's just because they don't know how to do it strategically. You make 1 payment before the statement closing date so that you minimize the amount at that time. You make the second payment right before the payment due date so you don't get late. That's all there is to it. It's not rocket science. Just throw that out there for you. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. What we ask always, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
My boss just pushed me over the limit. I'd like to call